Today, Bitcoin and Ether shrug off last week's losses. Binance reportedly developed a plan to avoid prosecution by U.S. authorities. And Caitlin Long of Custodia Bank weighs in on all the scrutiny surrounding crypto banking, including the uncertainty at Silvergate. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto prices are mixed to start the week after taking a beating over the weekend on the heels of Silvergate expressing doubts about the viability of its business. As of noon Eastern, Bitcoin and Ether both rose about 0.5%, with Bitcoin trading at around $22,500 and Ether trading below the $1,600 level. The Matic token, however, dropped slightly, trading at around $1.15. Okay, let's talk about the top stories. First, 2 days after Silvergate raised doubts about its viability, the digital asset-focused bank said it made a, quote, risk-based decision to discontinue its crypto payments network. The decision to halt the Silvergate exchange network was announced late on Friday, with the company writing on its website that it was effective immediately and that all other deposit-related services remain operational. Now, last Wednesday, Silvergate disclosed in a filing its ability to operate was a going concern and said that it had sold additional debt at a loss. Silvergate warned more losses mean the bank could be less than well capitalized. After that warning, crypto heavyweights including Coinbase and Galaxy Digital dropped Silvergate as their banking partner. Silvergate has been struggling to stay afloat after the collapse of FTX drove investors to pull out $8 billion in deposits in the last 3 months of the year. Next, Binance reportedly put together a plan to avoid the threat of prosecution by U.S. authorities as it started its American entity in 2019. That's according to the Wall Street Journal, which cited messages and documents from 2018 to 2020 reviewed by the news outlet alongside interviews with former employees. The Journal reports that Binance execs warned that any lawsuit from U.S. regulators would be like nuclear fallout for the firm's business and its officers. The report also alleged that Binance and Binance US are more intertwined than the companies have disclosed, mixing staff and finances and sharing an affiliated entity that bought and sold digital assets. We reached out to Binance and Binance.us for comment, and in a long statement from Binance, a spokesperson noted that currently Binance.com does not have any U.S. customers and that Binance.com and Binance.us are separate legal entities. The spokesperson also said that Binance already acknowledged that the company did not have adequate compliance and controls in place during its early years, noting that while the firm grew at such a rapid pace, it, quote, made some initial missteps which have now been rectified. The spokesperson went on to say that Binance made a massive investment in compliance over the past 2 years and now has a team dedicated to it of more than 750 employees around the world. The Wall Street Journal also reported, citing subpoenas and people familiar with the situation, that the DOJ and SEC have been investigating Binance's relationship to Binance.us since at least 2020. We reached out to both agencies for confirmation. The SEC told us it does not comment on the existence or non-existence of a possible investigation. The DOJ didn't get back to us right away. Last up, police in Singapore have started to investigate Terraform Labs, the company behind the failed Terra USD stablecoin. That's according to a Bloomberg article published today, pointing to an emailed statement from police, which also noted that inquiries are ongoing and their investigations related to Terraform Labs. Now, as you know, Do Kwon, the company's co-founder, has been on the run for nearly a year. He's wanted by authorities in South Korea. Authorities reportedly told Bloomberg Kwon isn't currently in Singapore. Meanwhile, in the U.S., the SEC just recently charged Terraform Labs and Kwon with defrauding investors in alleged crypto schemes. Kwon also faces charges in South Korea. All right, for our main story, let's turn back to Silvergate. Crypto World's Tanea McKeel spoke with Caitlin Long, who's the CEO of Custodia Bank, which aims to bridge traditional finance and digital assets. They spoke about the turmoil at Silvergate Bank and Custodia's lawsuit against the Kansas City Fed as the central bank scrutinizes this new type of institution.
Caitlin, thank you so much for joining us. So we've been covering this story with Silvergate, the drop in its shares, the price movement or lack thereof, really, with Bitcoin and Ether, and following that story since about the middle part of last week. What has been your biggest takeaway so far?
Crypto and banking is a front burner issue for sure, and all eyes are on not just Silvergate, but the FDIC Inspector General last week came out and noted that there were 11 different banks that, as they said, quote unquote, may have been involved in alleged wire transfer fraud involving FTX. And so there's a lot of focus on Silvergate and Signature, but looks like there were many more than just those two.
FTX really kind of fueled the argument for more crypto skeptical regulators that are seeming pretty eager to come down hard, especially with all of the enforcement actions that we saw in the middle of February. Tell me what that relationship between the two looks like from where you sit, both as someone that's been in this industry for a really long time, for many years now, and also as someone that's running a bank for crypto businesses.
Right. We're not operating yet as a bank, but your question is spot on. The bottom line is a huge swath of the crypto industry deserves to burn on a raging funeral pyre, and the markets are taking care of it. And FTX was, of course, part of that. There are, of course, legitimate, lawful uses of this technology, and that is where Custodia intends to play. Unfortunately, in Washington, D.C., however, what we're seeing is the baby is being thrown out with the bathwater, because you have a lot of regulators who are embarrassed that they missed major topics such as the implosion of the crypto lenders, the FTX fraud itself, where Sam Bankman-Fried was donating a lot of what may have been customer money to political campaigns and trying to dominate the discussion. In fact, actually trying to set up a self-regulatory organization where he would have been in charge. I'm so glad the industry dodged that bullet, because he's not a believer in the real technology of digital assets. And then also those of us who were warning, because it was fairly obvious that there was a lot of bank run risk in the banks that were banking this industry. These deposits from this industry can literally disappear in the span of minutes. And so if the banks were investing in anything other than cash, they were susceptible to the bank runs that have actually occurred.
What was Silvergate to the crypto industry? I mean, still today, I guess. I mean, for so long, it was very difficult for crypto companies to get banking relationships, which every company needs. Banks like Silvergate and Signature seeing the opportunity to do so early. What did that mean for crypto businesses? And tell me about the dark cloud that's kind of hanging over the industry now, with the potential of a Silvergate bankruptcy on the horizon.
Well, the dark cloud is well beyond just Silvergate. It is the debanking, as you pointed out. You and I have been around a long time. This is the third wave that we've seen. It happens every 4 years during the bear markets that the digital asset industry gets debanked. And in fact, if you go back to the 2014 bear market, one of the things that caused Coinbase to become the big gorilla in the industry is that it actually was able to retain durable banking relationships. It's sad that that tends to become the differentiating factor, but it is. And entrepreneurs in this space have had to learn that that's one of the biggest existential risks to the startups in this space is whether or not they keep their banking relationships. And even the legitimate startups who are engaging only in the lawful parts of the industry, where there's compliance with anti-money laundering laws and a real focus on anti-fraud, those startups are also being thrown out, the proverbial baby thrown out with the bathwater. We've seen this before. The industry is, of course, going to be fine, but unfortunately, there will be arbitrary winners and losers picked by the government as a result of this.
The industry is going to be fine. Is that just a function of time, or are there substitutions?
Well, it's so interesting because the U.S. tends to be so U.S. focused. And in fact, as you know, there are no borders in this technology. That's one of the wonderful things about it. And of course, most of the increased adoption, especially for Bitcoin, is coming in places where one might not have expected it. In the U.S., it is true that most of this industry has, in the last couple of years, been a speculative industry. But there are a lot of people in the world who do not have bank accounts for whom this is meaningful, this technology. Same thing with regard to emerging markets, where in some countries, you see, for example, what's happening in Nigeria as we speak, an attempt by the government to get away from cash and roll out a digital central bank digital currency has actually caused a spike in the use of Bitcoin. And that's because the average Nigerian on the street, according to press reports, has not been comfortable with the government issued currency. And now that cash is being phased out, they're looking for something that they trust more and turning to Bitcoin. We've seen that in a number of emerging markets. It's just that, for folks in the developed world who've never had to live under hyperinflation, who have never had to live with a distrust of their national currency, it's we have trouble imagining exactly just how meaningful that alternative can be to folks just trying to live their lives and store the earned fruits of their labor in a store of value that's better than their government currency.
As we're talking about crypto companies being choked from fiat on-ramps, what has your experience with regulators been like this year?
Oh boy, this year in 2023, it's downright hostile. What happened? Well, what happened to Custodia? We were making lots of progress, and then suddenly in January we got blindsided, and on January 27th, you saw an all-out attack on Custodia. We were the tip of the spear on this debanking wave. On the same day, at the same time, the White House, the Federal Reserve Board of Governors, the Kansas City Federal Reserve attacked Custodia, and then the Senate Minority Leader, Senator Dick Durbin, came out over the top a couple of days later on the Senate floor to attack us. The funny thing is, I have no idea how the White House or Senator Durbin even knew who we were. We're not even an operating bank yet. So why were we incurring the wrath of obviously very powerful government agencies? There is a lot that will come out about what happened to Custodia and the White House interference with the Federal Reserve application, and just the nature of the politicization of this. I've spoken out very strongly against the politicization of this, and we've had to pivot, of course, at Custodia, but stay tuned because we're actually very close to launching, knock on wood.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.